Is Chamath leading the SPAC market crash? The SPAC market is just not catching a break, and short sellers have picked their fight with SPACs, which they're clearly winning, and Chamath, the face of SPACs, the king of SPACs himself, seems to be going down with them. CNBC SPAC 50, which tracks the 50 largest pre-merger SPACs by market cap, has dropped nearly 19% from its highs in the past month. There's been a lot of news pushing the negative narrative on SPACs recently. You don't have to tune into CNBC for too long before hearing about the SPAC bubble, or better yet, the SPAC mania or the SPAC frenzy. At the end of the day, I don't care about the narrative. I care about the numbers, as should you. So the question we need to be asking ourselves is there a buying opportunity or should we actually be scared? But first, please hit the like button and subscribe if you haven't already done so. And if you have any suggestions, leave them in the comments because I'm still new to this and trying to figure it out. Without a doubt, there's frothiness that we do need to be aware of. There's more than 300 SPACs that raised nearly $100 billion this year alone. And that's after raising $80 billion last year. And Chamath contributed by raising about $4 billion himself. So SPACs have clearly been on the SEC radar, and they're cracking down on them more recently, and short sellers and the media seem to be joining that party. On February 4th, Hindenburg Research released their short seller report on Chamath's Clover Health, indicating a big oversight on disclosure of a key Department of Justice investigation to prospective investors. Then on March 10th, the SEC advised investors not to make decisions based on celebrity-endorsed SPACs. Then on the next month, the SEC issued another warning on financial projections and SPAC presentations. And then they followed that up with updates to the reporting requirements for SPAC warrants as liabilities. And just recently, Bloomberg released an article named SPAC Wipeout is Punishing Followers of Chamath Palihapitiya, claiming that his SPACs have been among the worst bets. All of this, in short, leads to the SPAC market taking a nosedive and Chamath being the poster child of it all. He didn't respond formally to the Clover Health allegations, which I'm more interested in, but he did respond to the Bloomberg article on Twitter by posting the inception to date returns of all the SPACs. Essentially, what he's showing us here is that we have a blended IRR of 40 to 50% on all of the SPACs, depending on whether you invested on IPO or at merger announcement, and that outperformed the S&P 500 during the same time. It's my opinion that Clover Health was his only miss, and he's damaging his reputation by not addressing it better. It could be a legitimate mistake, in which case he should just come out and admit it, because his followers deserve that closure, and right now he's just getting more haters than followers. Here's some of the criticism he received on his post. The Nasdaq is a better comparison for his technology companies, which is a fair point. IPOE is driving most of the outperformance, which benefited from a huge one-day pop. And he released the figures right after a clove short squeeze, which is kind of funny. Ignoring what he does as a promoter for a second, I don't see a reason why we can't trust Chamath as an investor. He's good at what he does, and he's proven it. He's a billionaire for a reason. And with the exception of Clover Health, I see the vision of the companies he's bringing public. So is there a buying opportunity for SPACs right now? Yes, and there's two strategies that I would play. Number one, find SPACs trading at a discount to NAV with a proven track record with proven management, and you can't really go wrong with the strategy where your worst case is to get a small yield and your best case is to get a big pop on post-deal or post-merger. This is known as SPAC arbitrage, and it's a very proven strategy. A couple of months ago, this wasn't possible because SPACs were all trading at a premium. Number two, you can take a little bit more risk with high-profile sponsors like Chamath or Bill Ackman. Their SPACs will probably never trade at a discount, but Chamath's IPO D and F are trading at or below $10.50, which still represents a very good risk-reward ratio in my opinion. I do believe that the SPAC market is due for a reshaping, but I also believe that Chamath will come through with another home run. Obviously, the negative PR isn't quite helping him right now, but isn't that the opportune time to buy?